Hello everybody and welcome back to GMD Investments. Gold is in my opinion a non-productive asset. It doesn't produce anything. The only way for gold to be a great investment is for the whole world to go to hell. Historically speaking, it's never been a good idea to bet against the markets. We've got past wars, pandemics, the financial crisis, Great Depression, and the list just goes on and on. Buffett said when you buy an ounce of gold, all you can do is stare and look at it and play around with it. However, if you buy an acre of farmland, over time that can produce crops and more farmland, etc. And at the end of it, you're still left with that acre of farmland. Gold, you are just left with just gold. Even though gold isn't a good investment overall, Ray Dalio believes it should still be a part of your portfolio as a form of diversification and a safety against the depreciation of the currency and rising debt, which is a big problem in today's society. But like I said, that doesn't make it a good investment. It should just be used as a safety net against potential disaster, etc. Yes, gold occasionally has outperformed the S&P 500 over short periods of time. However, over the long term, the S&P 500 has significantly outperformed gold, and that's where the magic of compound interest happens over the long term. As we can see, over the last 50 years, the S&P 500 has experienced a gain of over 4,000%. However, gold has only reached around roughly 1,500%. And according to data across 100 years, the S&P 500 has delivered a whopping 55,000%, whereas gold hasn't even reached 10,000%. Gold also won't provide you with any dividends that you get from investing in stocks over a period of time. If we take Apple for example, $10,000 invested in Apple in 2012 would have produced over $3,000 in dividends, nearly one-third of the original investment in a decade. This is excluding stock buybacks, which is another thing Apple does a lot of. Apple in total has returned nearly $732 billion to its investors through stock buybacks and dividends since the start of 2013. This is money we are receiving for doing nothing. They do all the work, and all we gotta do is hold the stock through good and bad times. So like we said earlier, gold doesn't produce anything like Apple is, that is producing revolutionary products and technology that has had a significant impact on the world, and it doesn't provide profit-sharing payments to investors, such as dividends and stock buybacks. I had to make this video when I heard someone tell me gold was the next big investment. I almost spat my drink out laughing. However, having said all of this, like I said before, I definitely don't think it's a bad idea to invest a small amount of your money into gold as a form of diversification, and if it helps you sleep at night, then so be it. Of course, one big reason why I don't like gold as an investment is because Mr. Buffett and Charlie Munger also don't like it at all, and these two investors' track records are truly impressive. Munger and Buffett's simple strategy of buying wonderful businesses at fair prices reaped rich rewards. Between 1965 and 2022, Berkshire gunned out 19.8% annualized returns, double that of the S&P 500. I don't think you quite understand how extraordinary this is. So when these two say they don't like gold as an investment, it's probably a good idea to listen. In a Berkshire annual meeting, someone asked the question, what would you say to me if I was to sell my Berkshire shares for gold coins? And Mr. Buffett in short said I myself couldn't ever imagine of doing that, and I would rather trust in the intrinsic value of a bunch of really fine businesses run by good managers, selling products to people that like to buy for a long time. Then take some piece of metal that people dig out of the ground in South Africa and then put back in the ground at Fort Knox after transporting it and insuring it. However, the main and most important thing he said was that he never understood the intrinsic value of gold. That's why he stays away. It's out of his circle of competence. And Charlie Munger commented on gold, saying that there is something strange about investing in an asset that will only really go up in value if the world goes to hell. It doesn't sound like a very rational thing to do. All in all, I hope this video has helped you understand more about gold as an investment and the returns it has yielded in the past compared to the S&P 500. I'd like to thank everyone for watching this video, and if you enjoyed the video, subscribe for more content going forward and to stay up to date with market news, investing ideas and the like. It's been a pleasure. Until next time.